Later in the hour, folks, we're going to go to Mars. They're going to launch the rover off of Cape Canaveral. That's about innovation, Ben Laidler. Is this market lift out 6 months, or for that matter, out 6 years? Can it be extended beyond innovative technology companies?
Yeah, I think you're seeing that. I think the story of this rally is exactly that. 2/3 of the market, whether in the US or globally, earnings are sort of okay. They're down 10, 15%. It's that 1/3 of the market, those sort of deep cyclicals and financials where earnings are sort of being vaporized. And most of that 1/3 is just a story of accelerating tech adoption, the strong getting stronger. And we got a taste of that in the congressional sort of testimony yesterday. It's clearly not a one-way street. But I do think the sort of foundation of this rally has been sort of tech, sort of broadly defined, sort of tech-enabled businesses are doing very well here, and I think they sort of remain the future. And I completely disagree with those that think we're in some sort of bubble here. I have no problem with a lot of these valuations and the growth outlook.
Ben, you said that one potential upside surprise would be more fiscal stimulus, and yet here we are. We're heading into tomorrow's deadline for the $600 enhanced unemployment benefit, with no deal on site, and yet it seems like markets are taking this in stride because they have priced in the extension of these benefits. What's the upside surprise?
I think we get a bigger deal than, I think we get a $2 trillion deal rather than a $1 trillion deal. I think actually, the stars are aligned a little bit behind the scenes. I think everybody agrees we need something. I think there's quite a lot of agreement on some of the packages that we need. I think interest politically, we have the election coming up, which I think is piling pressure on everybody to do something. And I guess now, relative to 3 months ago, I think the virus issues are much more in the red states than the blue states. So I think you put all that together, and I think there's the ingredients for a deal. And I think when all is said and done, we get a bigger deal than maybe people think right now.
Ben, when we talk to economists and central bankers, the policymakers, they might say the balance of risk is tilted to the downside. When I speak to you, I hear the balance of risk is tilted to the upside. Why is that the case for you, Ben?
Well, I'm not the economist, but I think what's been fascinating about sort of the last month or so is you've had this huge spike in virus cases in the US, and the data has been incredibly resilient. And you've seen that actually globally as well. And I think that really speaks to the fact that, people are getting on with their lives, people are adapting, the death rate's been coming down, we're getting sort of better at managing. We're getting better at managing in this, and I think that has been a huge takeaway. And now we're beginning to see, tentatively, those US virus cases on a sort of rolling basis begin to sort of come down. So if that's true, then I do think there's more resilience to this recovery than maybe people think.